I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
Back with us is frequent guest Chris Vermeulen. His website is thegoldandOilGuy.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Right now, you're looking at how the markets are breaking and what direction they're going. Let's start off with the equity markets. What's going to happen with them?
Sure, yeah. Our last segment 2 weeks ago, we talked about the economic cycle and the stock market cycle and where everything seems to be within those cycles. And long story short is I feel as though we're in the late stages of a bull market. And during the late stages, we tend to see commodities start to outperform, start to hold up. And the sectors that benefit the most are typically precious metals and energy stocks. And that's exactly what we've been seeing. We've been seeing precious metals put in a bottom, massive rally in gold mining and silver mining stocks, energy stocks, and oil have been on fire. And that's like the safe haven play. And we've been seeing money rotate into other energy type plays, which are utilities. And utilities, you know, they're kind of the real... When somebody gets nervous about the market, you don't want to hold on to companies selling products that, if the recession comes, they're not going to be able to afford them. So typically we see money flow into multiple different safe havens during the late stages of a bull market, and utilities is one of them because everybody's still going to need running water, natural gas, all the services to keep, you know, the whole world kind of moving. So we've been seeing those sectors hold up extremely well, and utilities are up 20%, more than that actually, in just the last couple of months. Really, just this year, we've seen them surge over 20%, which is amazing. And the overall equities market has been, you know, underperforming. It's had a really nice rally since after the January crash, but really it's been underperforming. And we're seeing, if you take a look at the bullish percent index for the SP 500, which is an index chart that tells you how many stocks have bullish patterns versus bearish patterns, and we've been seeing that decline for a long time since it topped out in April this year. It's been making lower highs, lower lows, forming a very bearish pattern. So the stock market is, you know, it's testing kind of all-time highs in the last couple of weeks, but there's very few stocks holding it up, and the momentum looks to have shifted to the downside. And I think we've seen the top of the market for this year. I think we're going to be heading sharply lower.
Is the trend right now to see more money flowing into fewer stocks?
Yeah, we're starting to see some fear creep into the market. Just yesterday we saw the VIX, in the last 2 days we've seen the VIX jump really like 30% or so. And that goes to show there's panic in the market. And I've got a ratio that I use, which is the NYSE up and down volume divided by each other, and it gives me a ratio of, I can kind of tell when the big board, the big brand name stocks that hedge funds have to buy, when the average market participant puts money into their mutual funds or pulls money out, those are the stocks that I like to track because that gives me a good sentiment of what the masses investor are thinking. And yet, in the last 2 days, we've seen a lot of panic in the market in those big broad board name stocks. And today we had a ratio of 7 shares being sold on the NYSE to every 1 being bought. And I consider a ratio over 3 to be panic selling. So when we see 7, that's a pretty significant wave of selling. Pretty much everybody's running for the door trying to get out of equities the last 2 days. And I think it's actually setting up for a really nice kind of momentum bounce that could last a couple of days here, but overall I think the tide has changed. This rally we've seen the last few months here in equities, I think it's topped, and I think it's going to be sideways, and sharply lower over the next month and a half.
Will people again be lulled into confidence over the summer and then get a shock like we had last August 24th?
Yeah, that was a real shock. It's amazing how that sell-off took place at a time when, it really caught a lot of people off guard. It's one of the lightest volume times of the year that's usually traded, and it happened to the market just crashed on massive volume. I kind of have a feeling something very similar is going to happen. A lot of big traders are expecting the market to fall, and you kind of look at the chart and you look at the weekly chart, you're like, well, we could have several more weeks before the market really tanks. But the market, the way it's been moving and the way we've seen the recent crashes back in last year and again this year, they seem to take place kind of when nobody's really expecting it to happen. And I feel like there's one on the verge of happening. We could have a terrible couple weeks in the market, and I don't think people are expecting it to happen. It could happen potentially as soon as next week or the following week. Like, the chart is setting up for a very sharp move. And I don't think it's going to wait. I think a lot of people are going to get hit early this summer. The markets are going to crash, and they're going to be very hesitant to get back in. And I think that's going to be kind of the tide, that the tide is going down, that people aren't just going to pile back in and buy down at these lows. I think they're going to be scared to put money in, and they're going to flock to all the safe havens, which we mentioned, which, bonds and all those things. And there's going to be less money flowing into stocks. And the big players, there's going to be lots of withdrawals, and the stock market's going to slowly bleed out and continue to grind lower. I think the bear market has started pretty much as of last week, and I think this is it. We're going to be heading lower here for 6, 12, 18 months. I think it could be terrible.
Are there any safe havens that you would recommend to clients?
Yeah, there's I think there's different times to move around them, but the main safe havens, would be bonds. You look at bonds, they've had a tremendous rally this year, but all they have done is rallied up to the previous high within a massive bull flag. And if they break out, we're going to see a minimum, I think, a 13% run in bonds, and that's looking based on the 20-plus year Treasury bond, the TLT ETF. I think we could see an easy 13% run, if not much higher, for people who get into bonds. And obviously yields will be terrible. They'll be extremely low. It'll be the lowest yields probably ever seen. But I think bonds are going to be a great play. And we've been seeing them move up and break out, and these patterns are just showing that, when the market does crack, there's going to be so many people flooding into bonds because it is the natural kind of mass market safe haven. Everybody just thinks, get out of stocks, go to bonds. So bonds are going to have a huge squeeze. Long term, do I really like bonds? I think there's potential flaws in bonds. I think we're going to get a nice big move and rally up here probably over the next 6, 8 months. Then I think it might be time to start rotating out of bonds and more or less going to cash or other assets. Obviously, I like precious metals. They're starting to break out. They're precious metals, gold, silver, mining stocks they've all built this very strong basing pattern. They're on the cusp of breaking out and having a huge move to the upside. And a lot of it's going to hinge around what the U.S. dollar does, which is flirting with support. And if the U.S. dollar crashes, then we're going to see the precious metals sector explode in value. And there's going to be a lot of big movements taking place going forward. But I think bonds and precious metals are the two that I like the most. They're the ones I have most of my capital in at the moment. And obviously, shorting the stock market is another big play that I'm a big fan of because market typically falls 3 to 7 times faster than it rises. So we could, if you short the market, when we do have these crashes, in 3 or 4 days, depending on your time frame of trading, or 3 or 4 months, you could have a massive move to the downside that would take years for the stock market to do. It's amazing how quick prices can drop.
When you suggested bonds, be very careful which bonds you get. In Japan, of course, they have negative interest rates in their bonds, and now Japan's biggest bank is refusing to sell government bonds. In Germany, the 10-year bond is now into negative interest rates. So be very careful, right?
Yeah, oh, for sure. Yeah, I'm kind of, when I'm talking bonds, I'm focusing on either U.S. or Canadian bonds because that's where the majority of money is going to flow. Because I'm focusing more or less on the U.S. and Canadian markets. So, those are the bonds I'd be talking about. Going overseas, I think you're playing with a lot of fire. Things could implode, default. Who knows?
We'll have more with Chris Vermeulen right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking to Chris Vermeulen, the gold and oil guy. Chris, what's going to happen with oil?
Oil's obviously had a huge rally since the lows down in January here, February, and we've had a strong rally all the way back up that $50 level. Now, based on technical analysis that I follow and cycle analysis, I have a feeling we've seen crude oil have its nice run. It's almost up 100% from the dead low that it put in this year. But I do feel as though it's going to have a breather here, and I think we could see crude oil and energy stocks flounder for a long time. I think the economy, the news, things are going to start to get worse. It's not going to be good for oil, and that's going to keep some pressure on it. And as oil falls, it'll help pull the stock market down with it. And we saw this back in 2008. You and I have talked about this quite a while ago that, oil and energy stocks, they may be really oversold, and they may have bottomed already, which they probably have, but until the U.S. stock market flushes out, finishes its bear market in 6, 8, 12, 18 months, depending how things play out, those stocks are going to flounder. I think oil's going to flounder. They're going to be in a very big range, a massive percentage range, up and down until the markets firm up. So while I'm a big fan of all this going on, I'm not a big fan of getting long energy. I'm actually kind of more negative, but biased on crude oil right now.
Will we see $60 oil this summer?
I don't think we will. We've just started to break down with this bearish pattern. And if it plays out, I think it's going to bring us into the end of the year, and we might end up just seeing crude oil back up to the 50, 52 level to test that area by the end of the year. If it does break this 52 level that we've had, then 60 is for sure, a straight shot up to 60. You go, that's the next major resistance zone. All the volume, price by volume, everything shows once we start to break that 52, it should just run right up to the 60, and that will be the end up probably being the high where it'll consolidate for a long time until this bear market in equities ends.
Were you shocked at all that oil went over $50 last week?
No, because you know what? It made a high earlier in the year in October, and I was waiting for price to come up, and the market likes to run the stops, so meaning it likes to break those highs. So anyone who's short oil will have stop orders placed, so they get squeezed out of their short place. So we'll see the market move it up, break that previous high, all the stop orders trigger. It creates a flood of instant buying, and it creates a quick spike to the upside, clears the air, gets all the shorts out, and then it sells right off. And if you look at the weekly chart of crude oil, that's exactly what it's done. It's gone up, it pierced that high volume breakout, a break above that previous high. All the shorts, you can tell it's short covering that kicked in, and then the sellers stepped right back in and have been driving prices down ever since. And just this week, we're closing below some critical support zones and support trend lines. And my cycle analysis shows we should see some sideways pressure for about 2 months. So we're going to see some downward pressure in crude oil. So that's why I have this feeling we've seen a reversal candle cycle. The bias is kind of down for a couple months. And I think because it's not going to perform really well, that's going to put a cap on the stock market. And if oil does sell off really hard, then it's going to pull the stock market down even faster.
Is Nigeria more of a loose cannon than many expected it would be?
To be honest, I haven't followed any of that So I'm not following the Nigeria story. I don't even know what's going on over there, to be honest.
And is there enough supply of oil around the world that if one supplier goes down or cuts back, it can be made up very quickly?
Yeah, it probably depends who goes down, but there's still so much supply out there that it'll be a relief, I think, to get a lot of stuff out of storage. So it's not anything I'm concerned about is running out of oil anytime soon.
Although central British Columbia did have a gasoline shortage and Petro-Canada stations shut down, it was connected to the Fort Mac fire and also the fact that an Edmonton refinery shut down for unexpected maintenance. But it seems to me every spring there's always a fire or an explosion or a maintenance issue that happens at a refinery. Maybe they should factor that in now.
Yeah, there's always going to be some hiccups. The question is it fire related? Is it maintenance related? Is it, some type of breakdown? I don't see there ever being a real shortage. There may be a shortage for a couple of days, couple of weeks, but nothing significant that's going to create a huge hiccup, I don't think, in price.
OPEC says it expects that production will be, quote, stable by the end of the year. The International Energy Agency says it's expecting a slight surplus. Are those the two same things?
I don't know. I think we're going to see demand for crude oil continue to, I think we're going to see it slide and weaken, and that's why I think we're going to see crude oil flounder. If it does reach the $60 per barrel level, it's going to stay under there, I think, for a long time. We're starting to see earnings. We're starting to have really poor numbers, job numbers. When the economy starts to get weaker, we're going to see less demand in crude oil, and it's going to be a real negative picture. Things are going to underperform. I just don't see crude oil exploding in huge demand, and so who knows? I think things will stabilize because there's going to be less demand and there's no big rush to get it out. I don't think it's going to stabilize in terms of huge demand, lots of constant demand. I think it's just going to be, we've got enough oil, things are running fairly smooth. It's just going to be a steady grind.
Is this a little picture on the future? Mercedes finally has embraced electric vehicles. It seems they're now prepared to roll out several different models, cars, trucks, utilities.
I think it's an awesome idea, but that's a long ways out before any of that takes place. But I know for sure once those electric cars take over, it's going to put a huge dent in the use of crude oil. I think I know a few people have got the Teslas and little smart cars, and they love them, but you are really limited. It's a much smaller group of people who can really use them because they don't really go. You can argue they go far, but depends what you do, right? So you need to be fairly local to use them because they only have a limited range. So eventually, I think it's going to put a huge dent in crude oil. I think there's going to be a lot of electric cars for all the local workers and stuff. I think it's a great idea, and it's going to hurt oil, no doubt.
Well, a Tesla owner told me he's not scared about range anymore because his onboard screen tells him how much energy he has and whether he has to go to the nearest charging station, and the screen displays where it is. So before, they used to have what they call range anxiety. Now the car itself takes that anxiety away.
Yeah, it's an awesome feature. Yeah, but still, you're still always worried. Am I going to have the distance, the range, the energy? But eventually that'll become the norm. People will just, eventually we evolve, right? So eventually that'll be the total norm. We'll already anticipate it. We won't have that anxiety because we'll kind of know our ranges, what we're doing. It'll just be kind of part of the process. You just expect to have to charge somewhere or expect that you're going to have to pause your trip and, wait a couple hours for a charge, all that stuff. But it'll come into play, and it's going to, obviously it's going to hurt the oil market in a huge way. And of course, it's going to create a huge opportunity elsewhere. So, the less we need to use up, build carbon, the better. So.
Well, I have a feeling in 50 years' time they'll be saying, what? You burned oil to power your vehicles? Oil is so valuable because you make so many things out of it, plastic, pharmaceuticals, and so on.
Yeah, I know. It'll probably be like that. We'll probably have some amazing energy cells down the road, and a few generations from now, they'll be, you used to sit with a tank of fuel running and an engine blowing up under the hood in front of you. They'll be like, that's so barbaric, right?
Yeah, a bomb under the back seat.
Exactly.
Chris, thank you very much for chatting with us.
Always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen. His website is thegoldandoilguy.com. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. Comments about the show or questions can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.